All right. I apologize if the sound is a little bit messed up. It's because I'm still testing out these microphones. I didn't really want to be holding a microphone, but all the other ones that I have, they don't. They're not doing the job that I want them to. So anyway, I just wanted to make a video anyway, just to say a few things. I feel as though I haven't really touched on many financial in-depth issues yet, but if I also feel there needs to be a lot of background given first and digging first, so that you can understand the philosophy of some of the things that I'm discussing, some of these financial issues. So anyway, again, my name is Troy White with Hoodoo financial educator, financial manager, financial whatever. Do all of that analysis, advisory, planning, essentially, is what I do. We could discuss my background later. I don't have too much time. So I just want to jump into continuing my last conversation, which was the financial psychology, discussing financial behavior and how, what motivates about money and investments. And there's a reason I keep touching on this is because the three areas of interest of mine and are the three areas of wealth building, which are entrepreneurialism, becoming an entrepreneur, starting a business, making money in that way, and portfolio building, however you go about doing that, whether that's all about your 401k or you just are a stock picker until you develop, you end up with a portfolio, or the or you have an asset manager actually helping you build portfolios to manage your investments. And the third area is real estate as an asset class. And that's because you can leverage real estate in a way that you cannot other investments. And so you get it's a different type of return. It's just a different type of investment and it's a different type of activity. So those three areas are my interests. Those three areas are what I'm talking about. Those three areas are what the business that I am with does. So first, we talk about the mental aspect of these because what I have found in the past is if you don't dig first with the mentality of the individual, and at the same time, I work with my clients. It's important for me that they understand my mentality. If there is no meeting of the mind, there is no reason for us to work together. We could still be friends or not. You can still be successful or not, but probably not with me because I have a certain way of thinking. All of the financial tools are the same, regardless of your mindset. But the problem is, it's not the tool. The problem is the client. The client will do something that is a little bit, that is all the way wrong with that tool. So for instance, I have a client and we get a certain type of insurance policy that is for a specific purpose and it is intended for a long term, play for his family's development and growth and legacy. Well, in just a whim, he decides at some point, oh, I need more money in my monthly income. So that's one of those expenses that I think I'll do it different. Well, the problem there is we could have had a cheaper way of getting you life insurance all of this time. And those since we would have had cheaper life insurance, the difference in the amount we were spending over here versus getting you just a term policy and investing the difference, whatever you needed that extra money for, well, we would have had that difference right there. So it's about understanding, I have to, be a little bit of a genie to understand your mindset and what your actions are going to be, because I don't want you to mess up my plan for you. So I often have clients where, I'm emotional about it too. I'm involved with your life. This is not, it's usually not a one shot. You just come ask me a question, pay me, and you gone. Usually I'm doing something for you. And if I'm doing something for you, you need to work with this person your financial practitioner, whatever their title is. That's just people who work in a desk. I'm doing more than that. So I don't have to have a title. But what it is I'm a person who you work with over time to get your assets in line and keep them in line and match them with your goals. And that's about the numbers, the understanding of the products, understanding of the formulas that need to be ran, the software that it needs to go through. But also, it's about understanding the mindset of people when it comes to money. And that's a missing component that it's just, you don't understand it until you have to understand it, because people just screw up. And we may be on a path to success, but, you know, it's the concert the other night with the Migos and Drake. Them $500 tickets, they need to go to the concert. So, you're gonna fall off the plan, and then something happens to your car. So you got to you got to take some money out of your rainy day fund to fix that. More off your plan. You know, it's a cascading of events usually when it comes to a financial issue. Especially when you're skating on ice and you didn't prepare for bad things to happen. You think, oh, I can just keep on skating, no problem. But you're not gonna make it. Something's gonna happen. You're gonna bust an ankle. So so that's just some of the insight of the things that I need to deal with clients. And often, like I say, it's not the amount of money that you have, because actually, you work harder for the broker client, surprisingly. And I was told this a long time ago. I just didn't quite understand it, but all my clients was broke at the time. Uh, that's who I was trying to help. I figure I entered the industry so that I could help, my friends and family. And my friends and family were all broke. So, if I know financial planning and investments, then my thinking is, well, I'll just show you how to do it and we'll all become rich. Of course, it takes money to make money, and then scared money don't make money. And then if you too scared to do anything, you don't make money. If you don't really want to listen, you don't make money. If you feel like, I'm speaking a foreign language when I tell you about, financial planning tools and these terminologies, and you don't want to hear it, you know, and on and on and on. So, everybody want to be rich, but don't want to do what it takes to be rich. So it's that kind of thing. So I found that out, and the industry, the financial services industry, is theoretically about helping people, but when it really comes down to it, no, they want to help people who already know what they're doing, who already have money. That's just the way that these larger firms have been getting paid all for all this time. It's just changing with the new technology and the new possibilities. But, I could tell you some stories about, I worked at a firm. I won't say what their name is, but we used to have big meetings, and the meetings are with all the advisors from all over the region. It's just like a monthly check-in. And you network, and then you get ideas from them, and part of it is we go around and everyone give a testimony about some client they're working with, a client issue, a unique something. And I don't think you have to say something, but for some reason, maybe I just raised my hand and wanted to speak, or I get called on or something. And so I had a good story. I had a great story. I was literally overjoyed about this story. This made it all worthwhile to me. This story. And let me tell you what happened. So I stand up. All these cats is millionaire at because their clients all got millions. I was one of the highest amount of accounts in the firm nationwide. They got thousands of advisors. I got the most new accounts, not the most, but I'm even on the list, like the top 10 or something like that, on a list of the top 100, because it's thousands of advisors. And I got the most accounts. But then it's like they got all these top categories, right? So it's like the most new accounts, the most, insurance accounts, the most, assets of this sold and all that. Only one I was on was new accounts. I'm never on the one that matters, which was assets under management. How much money you bringing in, right? I was never on that because all of my accounts is African Americans, and not saying all African Americans are broke, but all the ones I knew and all the ones I wanted to help was broke. So I'm like, hey, I know the info now. I can hook it up. I'm practically got a line of black people just, oh really? Oh yeah, I heard so and so. We got Troy White got the hookup on. He understand. Meet with him for lunch or something. He'll talk you to death on that. So that's how it was, right? I was getting a lot of accounts, but I was convincing people to start investing and open the type of accounts that's going to benefit them and their kids going forward. But the investment amounts are like, it was a minimum amount of $25 to have a direct deposit going into an account. Put a pin on that. It's a minimum of $25, right? Now, it's also a minimum of $500 to open an account. Put a pin in that. Now, remember the word minimum. What I found is the rest of these advisors didn't even know it's a minimum. They don't know we got a minimum. What is the minimum? Oh, I don't give a shit what the minimum is. That's they thinking, right? Because they don't want nobody with an account like that. If you don't have $500,000 in investable assets, you're not going to sit with most of these people in that room, except me, because I wasn't going after people with $500,000 investable assets. I didn't know none of them. So I was getting African American, I had a booth everywhere, right? And so at every event, if you need me, that's where I was at. Opening accounts, right? So I give them my testimony, right? So here's the testimony. I met a client. She was like 21, 22. She had a son about 3 years old. She had a job. I think it was McDonald's. And she was somebody, I remember it was hard to get with her. She was always, driving here to there. Here, oh, well, can we meet here? She faked on me about 2 times. I'll call her back. Did you forget? Oh yeah, I'm sorry, I'm still on the freeway. Going to pick her son up, going to the job, going to there, going to here, going to there. She was busy, right? And so I finally pinned her down, and she was like, "Okay, so tell me about it. Tell me, she was like, break it down because I got to go, basically." And so I'm telling her, everything she needs. I'm asking her questions about her life, and then I'm telling her, you know, uh, you got to do this, you got to do that, you got to improve your life, you got to try this. Your son is 3, let's get him a college fund started. Let's, get an investment account going for your rainy day fund. And then after that, we're going to do this. And after this, we're going to do that and this. But if you don't have no money, but it is a way, if you just invest $25 in each of these accounts a month, then we could do it. But you have to put $500 in to start it. She don't got $500. So I said, it's a trick I know how to do. We could start your automatic direct deposit into the account, and that's going to start. So they're going to send you a letter saying, you supposed to have $500 to open this account, but just keep disregarding that because you're still investing in your account. So in order for them to cancel your account, it's going to take more time. And by then you got a few $100s in the account, and they're not even going to worry about that. And every time I'm going to say, oh yeah, she said she's going to do it when she get her tax return back, right? So that's the drag that I'm throwing just to let her keep the account. I was doing that drag with about 20 people. I'm just just put $25 in. So guess what? How much I make off of that? Nothing, not a nickel, not a dime, not a nothing, right? So, but I'm getting people going. So anyway, my testimony. I said, yeah, I met this girl. She's on welfare, and she's she's got a 3-year-old, and she works at McDonald's. And I got her, I met with her. We mapped out her whole financial, how she can, invest for her future. And I turned her mind into an investor. I think we're going to have a good person who's, she's building a rainy day fund now, $25 at a time. I got her doing the minimum. And did, and I finished my testimony like waiting for my standing ovation for helping out. This is what the company always talking about. Oh yeah, we helping customers, right? We helping people. We're here to help people, right? So I'm like proud, right? I said this, right? Crickets. I look around the room. Mostly, I'll say about 98% Caucasian faces, maybe an Asian or two, right? They looking at me like, and I heard somebody say, "What you do that for? A minimum? I don't know what the hell a minimum." And now I'm starting to get hot under the collar. Like, oh, I realize instantly. Oh yeah, they don't even know nothing about that. They don't even know no broke people. Oh yeah, they trying to be millionaires off of people who already are millionaires. They're not interested in helping anyone. Any fool can pick you. I can put you into a portfolio. It don't matter how many numbers you got behind you. You got $1 million, you got $10 million. So what? We gonna divide it up the same way. You could just, and most of them, you'll be surprised. Most of them don't even know nothing. The advisors don't know what they're talking about. You know what they do? They go over there and hobnob with some wealthy person, right? Wealthy Caucasian and others, right? Who don't know what the key punch words this guy is going to say, and then they don't know. The advisor guy don't even know what he's talking about. But all he got is the signature on the form. So when he goes back to the office, the people who know what they're talking about can point. Oh, okay, yeah, we're gonna put them in this asset and this asset class and this portfolio and that portfolio. The dude who got the account, he doesn't know nothing about none of that. Nothing about none of that. He just know how to be a salesman. He could sell you, he could have sold you anything. It was just happened to be finances. And so, that's why I was saying you need to interview the person you're working with and understand what's motivating them too. But anyway, so yeah, I'm talking about that was like one of the most embarrassing moments. Like I instantly realized, oh, I'm the fool up here. They don't really mean help people. This ain't a place to do what I was talking about doing. It's not gonna work. It's not gonna work. And that was just the beginning of my understanding on how that part of the things go. But you know, it's just a thing about how the industry works and how financial literacy is such a problem in America, and then our perceptions of what other people are doing. And like I mentioned before, they always talking about that wealth gap. Man, that's wrong because I mean, if you understand statistics and all of that, first of all, they category of what they're calling uh, Caucasian white people, right? That keeps growing. They keep adding people who didn't used to be white. The white that African Americans are thinking about is the white that was the Confederates back in the day. But these white people that's here now, they don't know nothing about that. They're not even from there. They from somewhere, some European, whether Eastern European country. They're not even from over here. They don't even know that history. They don't even know what you're talking about. And definitely, some of these other ethnic groups, they don't even know this stuff. I'll talk to them, what I'm saying, and find out, oh, they don't even know who Martin Luther King is. They'll be, uh, Mr. Troy, uh, can you tell me about who is Martin Luther King? You'd be like, what the? And then you think it through. It's no reason for them to even care about what we got going on. It's like, lo and behold, why do I think they should care about what we got going on or don't got going on? So that's it's just a lot of realizations that you come to in the financial services industry. But as it relates to uh, African Americans and finance, we need to be a little more collaborative and have more of a collective interest. We need to build our market together and have more control over it. And that'll lead me into a conversation on social impact investing, uh, of what I plan to talk about. But I'm still trying to map out how to explain to you what that is and why. But I'll attempt to give you a little background history on it. So basically, social impact investing is investing in such a way that you're going to make an impact on society. So that impact is usually in the form of helping the environment. You invest to save the whales or something like that. You want to invest in companies that are, not cutting down the rainforest. You might refuse to invest in uh, lumber companies because they're chopping down trees. You might refuse to invest uh, uh, in oil companies because you feel you have some issue with the burning of fossil fuels, and you think that's bad for society and the environment. On down the road. So as it relates to African American issues, uh, me as an advisor and an asset manager that understands what is actually inside these mutual funds and ETFs, and and knowing what's inside those are companies. So as you're investing in a company, you have the power. You're an owner of these companies. And then we always say, oh, the big corporation is this and doing this and doing that. Hey, you're the big corporation. You got a 401k. You're the owner of this company. And I'll tell you how I came to the concept. And I mean, it's not only my concept, right? But it's just a way of investing that is one of my specialties, and it's one of the specialties that our firm does, is asset exclusion. And so that, and combined with other strategies of to support companies that you feel strongly for to make a social impact, is also to exclude those that do not. And so when we talk about issues in well, I was going to tell you how I came to that. I'm going to say back like in about like 1990, maybe like in 80 something. And I would say it was probably like 90. I was watching People Are Talking, Channel 5, KPIX. It's a San Francisco channel. You know, I grew up, born and raised in Oakland. So we had, it was just the three channels back in the day. I didn't even have cable. So of those three channels, if you sitting at home doing nothing like I used to do, then, I'm watching TV. And so And so I was watching. I'm a news junkie since I was a kid. Since I was a youngster, I'm always trying to figure out what's happening in the world. So anyway, I was watching People Are Talking. They had Jesse Jackson on. He talking about the Rainbow Push Coalition is buying stocks in companies so that they could go to the shareholders meeting and talk shit and make and complain about what's going on, what this company is doing right or wrong. And so they specifically buy stock in a company that they have a problem with. Think about that. So I got an issue with you. I don't like how you. I don't like that you servicing the prison industrial system, right? You selling the candy machines in prison. I don't want to support nothing that got nothing to do with nothing that got something to do with anything that got anything to do with the prison industrial system. That's my investment philosophy. So how you gonna do that? I ask you, are you currently investing in a company that is somehow supporting the prison industrial complex? As an African American, that's an important question. And so, how would we know that, right? So, you go to work and you got a 401k and you juice when you see your 401k statement going up. And you don't ask why, right? So, is there a private prison in your 401k? Is the reason that your 401k went up part of the reason because their stock went up? Well, if their stock went up, the only reason their stock went up is because they're going to make more money. The only way they make more money is if they get more clients. Who are their clients? Prisoners. So that's slavery, right? We know it, the 13th Amendment, right? So slave, so more slaves. So you support slavery. That's how I think. That's how I think it through, right? So I don't want to have nothing to do with that, right? So as a matter of fact, I want to punish that company for doing that. So that's what I'm telling you asset exclusion is to do. So in the case of Jesse Jackson, that philosophy. So if this company is doing something wrong, first off, we need to show that we can do something. So first of all, we need to harness our dollars. So if other advisors like me or all of y'all come work with me, right? So that means I need to get our trillions of dollars, right? Under assets under management, right? Or if all of us in the financial services industry as advisors that are on the side of African Americans will say, and if all African Americans pressure their advisors to say, hey, you own in this 401k is such and such stock, get it up out of there, or my account is up out of there. That's financial pressure. That's hitting them where it hurt. That's hurting their pocket. And so then and so let's say we collectively own shares in that company. And so now all of us own, some, just own some shares. That means we have a vote in what this company does. So we could also go to the shareholders meeting and we can raise hell. We can tell them how we feel about this. And so if we don't get action that goes our way, I didn't say the way of society, our way. It's our way or it's no way, then stock sold. So more sellers than buyers drives down the stock price. Period. So we gonna push it down until we get our way, and then we any company, and so then furthermore, any company that helps support that provides services to that company, we can investigate them too. And so, okay, I need you to check these portfolios. Oh, Sprite, you got a contract with them? You're out of there. Give you an example. Remember what just happened? Starbucks. They called the police on two young black men in there waiting on some to meet on an entrepreneurial endeavor. They finna meet in Starbucks. Everybody meets in Starbucks. Do you know how many meetings I've had in Starbucks? How many class sessions I've had in Starbucks? How many? As a student, I've been with my your team group in Starbucks doing our team. As a matter of fact, we did a report on Starbucks. We did an investment analysis project on Starbucks in Starbucks. So, but for instance, if in a situation like that, we had all African American investors say it first, say Starbucks, we are dumping your stock on X day unless we see some action that satisfies us. I don't mean some little a little bit of words well, I don't know what it's going to be, but you're not going to get by. You're going to feel some pain right here for the problems you just caused us. Oh, yeah, we holding them hostage. We're going to do like some of these other ethnic groups do. Is we need a no tolerance policy. We need to shut them down and then set up shop right next door to them with bro bucks. That's my mindset on it. Starbucks did some positive moves, so I'm not saying that I'm against Starbucks. I'm only using that as an example. I would even say Starbucks is a positive example of how to react in that circumstance. So now we got a model to follow. So they at least better act as good as that if they do something wrong. But it's a lot of industries need punishment. We need to put them fools on punishment. And the only way we're gonna do it is get our money together and do it. That's part of social impact investment. That's those that's the outcome that we are looking for is we want to make a social impact, and that's by discouraging bad behavior amongst corporations and encouraging good behavior inside these institutions. So, again, back to the mindset. That's where I'm coming from. So I haven't even started asking y'all, to become clients. Most of my clients are financial institutions. So going back to working with individual clients is, I'm like, here we go again, but I can't give it up. So anyway, that's what I got to do. So and so I've devised the tools that will make the impact that I want to make and I'll be able to use the technology that I want to use to connect and engage in the way that I want to make the impact and the transformation in my clients that I was hoping to make when I'm with these other companies, these other corporations, firms. But you're not able to do it in that way. So that's about. Of course, I could keep talking, but I'm just trying to give you little dibbles and dabs, so I don't lose your attention. So we'll talk some more later on financial topics. That's some financial planning insight as we. If you want to discuss more specifically about your personal situation, Yeah, you could come to my website. Go to hoodoofinancial.com, www.hoodoo financial.com. Go to get started, enter your information, press send. We'll start getting with you from there. So thanks for listening. I look forward to hearing from you soon. All right.